Hey, I'm Russell Leeds.
And I'm Anna Leeds.
And welcome to the Property Investors Podcast. On this week's show, we're going to be discussing the current market in 2026. Is it a good time to invest? Is there going to be a crash or is it going to be a market boom? We're going to be looking at the signs. We're going to be looking back through history to tell you what is going on and if you should buy right now in the UK. So the reason that I wanted to go into this, I saw an article. I'm going to bring up the stats here now on my phone. So Rightmove just reported some numbers.
Yes.
And we have just seen in January this year a 2.8% increase in the average asking price.
That's exciting.
It's quite a big increase. It's almost £10,000 in increase. And this is actually the largest January rise since records began.
Oh, wow.
So it's quite a big deal. Now, we have seen in the last year or so quite the opposite. House prices have been kind of falling, really.
Yeah.
I think a big reason for that, I don't know what you think, is because of the budget.
Yeah, I think people were nervous and people didn't want to invest. It really put people off, didn't it? I think so many people sold up and it just made it all, it was stagnant, or if anything, house prices dropped. Well, we took advantage of that, didn't we? We bought.
Well, we're buying right now. So we obviously think it's a good reason. I'll explain why, because you want to do your own due diligence, your own research. I'm explaining why I think now is a good time to buy. A lot of landlords aren't, though. I saw an interesting stat. 15% of properties that are going up on the market right now are landlords' properties, ex-rentals.
Yeah. Well, a lot of things have gone against landlords. I mean, it's just one thing after another at the moment with the EPC. Then it was like
Renters' Rights Act,
like what's coming
budget,
next?
mansion tax, all these things.
We've done all the new fines you can get from getting your bit of paperwork wrong. I think people are scared and people are selling.
Yeah. Here's the thing, though. I am probably more excited about investing in property right now than I have been probably when we got into property.
Really?
I think now, and let me explain why I think now is a good time.
Go on then. Sell me on it.
I'll sell you one. Well, I'll not even sell you one. I'll just tell you my thinking. All right, this is why I think now is a good time. Now, listen, no one's got a crystal ball. No one knows exactly what's going to happen. I mean, we could have World War III and it could blow all this out the water. But what we can do is we can look back through history to see what's happened in the past and learn the lessons of what's happening now and what's going forward. So you always hear it said, people say, property prices double every 10 years in the UK. Property prices double every 10 years. Do they actually? No. Because if we look back, we're in 2026 now. If we look back to 2016, house prices haven't doubled from 2016 to today, like nowhere near. And if you look back from 2006, 2016, they maybe didn't double, right? So they obviously don't double every 10 years. But if you go back far enough and look, so if we go back all the way to 1930, do you know what the average house price was back in 1930?
1930. No, it would be something crazy like £2,000 or something.
£400.
£400. Wow.
Right, so do the maths. I'd encourage you guys to do this at home if you want, right? So just think, well, if it's £400 in 1930, if it really did double every 10 years...
What would it be worth now?
Yeah, well, it would be 800 in 1940. It would be 1,600 in 1950. Go all the way through to 2020, it's £204,000. But they're actually way more than that.
Yeah.
Like significantly more. So what it actually means is, if we go back and look through history the last 100 years, not only have they doubled every 10 years, they've more than doubled on average.
Yeah.
Now, of course, they don't go up in a nice, straight, even line. That would be really nice.
That'd be too easy. Too easy if that happened.
Yeah, if you just knew, if you just like, well, if I buy a house for 100 grand today, it will be worth 200 grand in 10 years' time.
Yeah.
Happy days. That'd be really easy. Doesn't do that. What it does, it goes up a bit, down a bit, up a bit, down a bit. And what a lot of people are scared of happening, if you bought a property right now, let's say you bought average property right now is what, about 360?
Yeah.
If you bought a property for 360 grand and then there was a crash and then in 2 years' time, it was only worth 300 grand. That's what people are scared of happening. Buying at the wrong time. So let's go back and look at crashes throughout history as well. So during that 100-year period where it's doubled, bear in mind, we've had wars through that time. It's not like it's been smooth sailing for the last 100 years. There's been lots of things that have happened. Been 3 major crashes.
Yeah.
So in the 1970s, we had the oil crisis. So back in about 1973, house prices were 10 grand. They then had a massive crash and they dropped all the way from 10 grand to 7 grand.
Yeah.
Terror. It doesn't sound very much now, does
No,
it?
it doesn't. It sounds a bit laughable now, but...
Yeah, 3 grand. Three grand. But they dropped from 10 grand to 7 grand. 5 years later, they are back to 10. And then what happened after a crash, what happens once it's stabilized again, is it tends to skyrocket.
Yeah.
So we see this pattern happen over and over again, right? So house prices will be going really nice. You'll see a big boom. Then there'll be a crash. Then it will stabilize and we'll go through a period of stabilization, 5, 6, 7 years. And then it will skyrocket.
Yeah.
It then did it again in the 1990s. So early 1990s, we had the other recession. I actually am too young to remember that recession.
You're talking about all these like you were there buying property, but
I wasn't. But I'm too young to remember it. I'm just rubbing it in for anyone that's sort of over 40 on this that's listening. But yeah, we had the same thing, right? So house prices were worth 70 grand. Then there was a big crash, dropped all the way to 55. This one took a little bit longer. 7, 8 years later, it went back to normal. And then it skyrocketed up to 2008.
Yeah.
Now, this was when we decided
when we were old enough to buy property.
to get in. So we actually got married in 2008. So we were like young adults at this stage. We saw the crash. And I remember having a conversation with you. And I remember saying to you, look back through history. Look back at the 1970s. Look at the 1990s. It's going to happen again. We need to buy now.
This is the time to buy in. When it crashes is the time.
You weren't keen at the time,
No,
though, were you?
I wasn't. But we were very young at the time. I was 18 then.
Yeah.
And it was this big recession. At the time, I didn't even have a job. And I had to find myself a job. And, you know, then you suddenly decided you wanted to put all our savings into this property. And I think we got it for £72,000 at the time, this little flat.
Yeah,
That
and
we still have.
When we said all our savings, we had less than £1,000. We borrowed money, didn't
Yes,
we?
we did.
So it was like
That's a funny
all our
story.
savings.
Yeah.
We borrowed money. We joint ventured with someone. We managed to borrow the money, cobbled it together, bought the property.
And it felt a huge risk at the time because we'd borrowed all this money and this is what you wanted to do. But I thought, well, you have got a point. Property does go up over time.
I remember what you said to me.
Go on then.
You were like, if you want to buy it, buy it. But on your head be it.
I did, because I just thought, wow, you know, don't moan to me if this all goes tits up.
No, and we didn't actually buy in 2008. That was when we decided we wanted to buy it.
Yeah.
But like we had no money. I had a very low paying job at the time. You didn't have a job, but then you got a job working in a coffee shop. So we didn't have much money. But yeah, we bought something for 72 grand.
Yeah.
And since buying it, what we thought was going to we've more than doubled our money on it, right? It's more than doubled in capital
It's
appreciation.
one of our favourite properties that we
Yeah,
own.
it wasn't the best property that we've bought by a long shot. It was just a normal property, but it's the first one, and we think we timed it really well. It was a great time to get in because the crash had just happened, and then it shot up. Right,
It's also one of the only ones we still run as just
Buy-to-let.
a buy-to-let, a standard buy-to-let. And we've spoken about it a few times on the podcast because we bought it with the tenant and the same tenant's still
there.
So
And we don't even have a management company.
No.
It's literally just like.
but the money comes in every month, so we're assuming they're still in it. I mean, who knows? We haven't checked on it in a while. We don't know what we'll find. But I just feel like even if I went and it was trashed, how many years later is it? It's almost like...
Yeah, it kind of deserves a refurb now anyway.
Yeah, but I think they have messaged us a few times over the years.
Do you mind if we redo the kitchen? Nah, knock yourself out.
Yeah, so I think they love it. It just works. Most of our other properties we've changed over now and we do like SA, we run them as SAs, HMOs. But this is one of our...
Do you know what I think it is for me? I don't know what you think about this. I kind of think if you've got a tenant in who's a decent tenant, I would feel bad evicting them to run. If this tenant moved out, because it's in a town centre, I'd be happy to run it as service accommodation.
Yeah, I would.
But I wouldn't evict a tenant to do it as service accommodation because it's their home.
Yeah, and they love it, don't they? And I think why, for what purpose? They're loving it. You know, it's going up, like we've just said, it's doubled in value. It's a win-win.
Yeah, exactly. So We bought then, obviously house prices shot up. We see this pattern again and again and again. So why is that relevant to today? Because it hasn't crashed massively today like it did in 2008. It hasn't crashed massively today like it did in the early 1990s or the 1970s. What has happened since COVID, we saw a crash in COVID and it kind of stabilised 2022.
Then it kind of went a bit better because they did they lowered stamp duty.
Just after COVID, yeah.
COVID to try and get the market going again. So that there was a little, I wouldn't say boom, but properties were selling again. But then as recently, I feel like it's just come to an absolute standstill.
Well,
round by where we live.
Nothing's selling. No. Well, what's kind of happened? If you look at the graph, like I was looking back through like property prices on a graph through, and you could see like 2008, and then you see the crash and stuff. You can't see that when you look at 2022, but what you do see is a bit of a drop off. It's dropped a little bit. So 2022 to today, they have gone down. Now, when you factor in, this is called like the silent crash, what we're in now. When you factor in inflation, in real terms, this has been like a huge crash. It doesn't look it on paper, but it is. Because inflation's gone so through the roof in this period. And house prices have dropped. So in real terms, we've basically seen like 10 years of growth, bang, wiped out, especially in areas like London.
London's taking the brunt of it, really.
London, I mean, everywhere is the average. But London, has been like crazy, especially nice areas in London. Yeah. Nice houses have really seen this like hit. So in Chelsea, for example, house prices are back to 2015 levels.
Yeah, it's crazy, isn't it?
But that's not including inflation.
No, that's just house prices in 2015.
Yeah, you throw inflation in, you've got another 10 years back. We look back 2006, 2007 levels for places in London. That's like insane.
Yeah.
2 years. Bear in mind, over the last 100 years, on average, they double to stay the same for 20 years.
Yeah.
Is crazy, right? And a lot of it's happened because of inflation, because of this drop in the last 3, 4, 5 years. However, things like this Rightmove data, we're starting to get out. I think we're at the last stage of this crash.
Yeah.
So we're at the last stage where they're about to go back up to where they were. And we're starting to see that now. What happens after that? Well, it skyrockets.
Yeah.
Before another crash. It will crash again. It's not like...
That's it now.
Oh, yeah, they're just going to go up forever. But I do think, as far as the buying cycle works, now is a really bad time to sell.
Yeah.
And a really good time to buy. And
do you think the prices will go like absolutely shoot up? Do you think it'll be a bit of a, or do you think this is on the verge of being like, get in now because it's going to, do you know when it really rockets up?
Yeah.
Do you think it's going to go?
It kind of depends on who you listen to. So like Gary Stevenson, for example, he thinks that they're going to double in the next 5 years.
Yeah.
Now,
that's big. Double in the next 5 years.
That is crazy. That's like, I don't think they'll double in the next 5 years. I'd love it.
Yeah, it'd be
if
amazing.
It does happen. I can't see it being quite that drastic. If you listen to people like Savills, and they're thinking about 25%.
Which is still brilliant.
Which is still really good. Yeah, it's still like if you invest now, bear in mind, with property, you get paid for the rental income. As long as you're making a decent money on the rent, any capital appreciation is a bonus. So if you're making if you're buying like a 400 grand property, for example, and it goes up 25%, should be able to work that out immediately in my head. But I'm going to use a calculator just in case. Well, you tell me then, what is it? See if it's so shocking. So it'd be 500 grand. There you go. So if they go up 25% in 5 years, that means you've made 100 grand.
Yeah.
But bear in mind, on a 400 grand property, you're not going to buy it for cash. You're going to buy it with a mortgage. So you're going to put down 100 grand. Yeah. And then in 5 years, you've made... So just on capital appreciation, if they do go up 25%, you've doubled your money in 5 years, not including rental income. That is crazy.
Yeah,
if they do what Gary thinks, you've 5x'd your money in 5 years without including rental income. So now is definitely a really, really strong time to buy. Whether you're listening to Savills, whether you're listening to Gary Economics, whether you're listening to us or whatever you think, what we do know is they're going to go up.
Yeah.
Even if they don't, let's say it carries on crashing a bit longer and we've got the timing a little bit wrong. It doesn't matter because we know that they will go up eventually anyway. It's the same as if you bought in 1972, you'd be gutted because the next year it dipped. But as long as you don't need to sell, as long as you're happy to see it out, we're talking about this with some of the properties in Dubai because we're looking at some off-plan stuff here, and you can make an awful lot of money, but you might need to wait. It takes a bit of time to go through. So I think as long as you're not over-leveraged, the only time I wouldn't buy property is if I had to get the money back out.
Yeah.
If it was like, you buy this as a 5-year investment and then you have to sell, that's then a bit risky. So if you're borrowing the money with a deal to pay it back or using bridging finance or something, suddenly, but if you're happy to sit in it for a period of time, you're laughing.
Yeah. And you
can't go
always
wrong.
are with property, aren't you? If you've got the money and you can just invest, sit on it, it's always going to go up over time. You're never going to be like, yes, it's been stagnant, but these properties will go up. And selling now is the worst thing you can do because it's come to a standstill. If you sell now, you are going to be selling. Well, people might be selling, like you're saying, Chelsea, less than they bought it for.
Yeah.
Why sell now? Unless like you've got to for some reason. Why? That just seems crazy.
Because they need the money. I was viewing a property, again, I'm in Dubai at the moment, although I think, by the way, I do think Dubai is a good property market. I would rather invest in the UK, but I think if you're going to have a multi-portfolio, UK is really good. Dubai could be good for maybe 10% of what you're investing in. I still think UK is better. But I was looking at a flat in Dubai, on the Palm actually, and they're selling it for 200,000. No, I'm trying to work it out in AED. Basically, I'll give you, it was 2.4 million AED.
Oh, AED. Okay.
And they bought it for, and they're selling it for 2.2.
Okay.
Why? Well, they're a European investor, and they've got to sell it quick for another property, another thing. They need the money back.
Yeah.
That's the problem with property. If you need the money and you're forced into selling it,
you can lose out, can't you?
You can potentially lose. But if you're happy to sit on it and you're happy to wait, you're fine.
It's probably, I mean, not that I'm suggesting selling, but it's a good time to get your hands on lease options in the UK. Because there's so many landlords that just want to be like, get rid of, but the prices are so low, they're probably like, they also are in a bit of a tricky situation to sell. So it's a great time to jump in there to find tired landlords that will let you take on the properties with an agreed price in 5 years' time to buy it off them. Surely it's a great time to get in with lease options.
Yeah, if their properties are in negative equity,
Yeah.
it's definitely.
Well, a lot must be, mustn't they? Come on, if you're saying Chelsea is that many years, surely anyone selling is struggling to
Yeah, or
make
anyone that bought in like probably
the last
2021 or something is probably in a bit of negative equity, probably, because they've dipped a little bit since then. So 100%. So that's the one thing. Look at what the experts are saying. The other thing, I take even more interest in this than what the experts are saying. It's like, what are rich people doing?
Yeah.
Where are rich people putting their money? Well, we know, we've talked about it on the show before, Lloyd's Bank, what are they doing? They're aggressively buying property right now. I saw Mike Ashley has just invested a big portion of his wealth into a company that do what? Buy or build rental property in the UK and rent it out, and he just bought into that company.
Oh, yeah.
You've got BlackRock, you've got all these big companies that are buying in. What does that tell you? Why would they do that if they didn't think? Why would the banks be doing it if they didn't think the market was going up? So while the news is often doom and gloom and, oh my goodness, landlords are getting hit with this, landlords are getting hit with that, the truth is now we're at the end of the cycle of the crash.
Yeah.
We're looking, all the signs are pointing that it's about to boom, and it could boom really big. Like it could boom 100% in 5 years type big, or it could be 100% in 10 years or 15 years. But what we do know is it is going to go up, and now is 100% a really, really good time to buy in.
Oh, do you know what though? We've never lived in the time, well, probably lived, but haven't invested in the time where it really has boomed like that. Have we? Where you get your hands on a property and then in 5 years you're like, oh my life, it's double. But it did happen to all our parents, didn't it? Yeah. So like, I remember when I talked to your mom and she says she bought like a property for like, how much was that first house you lived in?
Yeah, like, I don't know. I think she bought it for about 80 grand and then sold it for like 250 or something.
No, the one before that was like even cheaper, and it just, or maybe it was my parents, and it was something like 10 grand. And then a few years later, they sold it for like 100 grand. And I'm like, can you imagine? Like, it hasn't quite had a boom in air, I don't feel like, where within a really short period of time, they just went.
Well, the best
bang.
we've seen is the one we talked about, which is doubling over 15 years, isn't it?
But this could be the next one where it's just like skyrockets and it's amazing. And you just think, wow.
Although really has doubled over 10. It's just that then it hasn't really done anything for the last 5 years.
Yeah, true.
So we did see double over 10, which is not bad.
No, not bad going.
It's all right. It's all right. It's better than a poke in the eye of a sharp stick, as you say. Yeah, well, you're talking about like a really volatile market. I think that's the kind of thing that you could get in somewhere like Dubai.
Yeah.
Where you buy, like I was looking at once on the new Palm.
Yeah.
Palm, Jebel Ali. And there are properties on there that are very similar to the properties that we know on Palm Jumeirah. And it's like 18 million AED. I'm thinking that would be 60 million.
Yeah.
On Palm Jumeirah.
Yeah.
Well, what's the difference between the two? Well, one's not ready, one hasn't got the infrastructure, but it will be. If you bought that and waited 10 years, it's gonna be worth.
Hasn't Chris Eubank Jr. just bought one there?
Yeah. It's a very smart investment.
It is.
It's the problem with it is you can't live in it straight away. It won't be ready till like 2027. And even when it is ready, there isn't malls there isn't a gym there isn't. So you're kind of living on a building site.
Yeah.
Which you're spending a lot of money to not have it for 2 years and then be living on a building site.
Again, it's the long game, isn't it?
It is. And that's where the sort of deal that you're talking about. Obviously, it means putting a damn site more in than 100 grand or 10 grand or whatever. But I do think that you could buy that and you could literally be looking at, I don't know, 5xing it or something over 10, 15, 20 years.
Yeah. Oh, yeah. If you can, it's an amazing investment.
Yeah. But back to UK property. I think it's going to spike. I think it's a really, really good time to buy. But I'd love to know what you guys think. So let us know in the chat. Do you think now is a good time to buy? Do you own property? Are you selling? Let us know.
Well, I read some of the comments from last week.
Oh, go on.
Yeah. And it was a bit sad because there was a mix. Because we asked last week if people were selling or if they're...
Right.
And there was quite a few that said they were selling due to all the new rules, regulations,
The rules aren't
fines.
that bad.
So it has definitely put people off. People are like, I'm done with it.
Yeah.
I'm
You're falling for the trap.
That's what they want you to do.
It is. You're falling for it. You're allowing the big corporations in. You need to stay in the game. Now, it's a terrible time to sell. We've got property... we were like, should we sell it and buy something else? It's like, nah, don't sell now. It's a terrible time to sell. They're about to go up. You'd be mad. So please don't sell. But if you are, let us know. Why? Why are you selling? Let us know in the chat. Right, guys, I'm Russell Leeds.
And I'm Anna Leeds.
We'll see you next week.